of exchange-traded funds is starting to make headlines as investors look for diversity. The African Cup of Investment Management is currently underway in Cape Town. Joining me from our Cape Town studios is Deborah Fuhr, Global Head of ETF Research at asset management firm BlackRock. Deborah, thank you very much for your time today. ETFs, again, just as emerging markets are the flavor of the month, we know that ETFs are also starting to gain quite a bit of traction on a global level. In fact, just looking at the ETF markets hitting around $1 trillion. Your view on how it's playing out in South Africa, because we've also seen quite a lot of ETFs launched here, but the question is the uptake as good as what we've been seeing in the likes of Europe and, of course, the US?
Hi, so it's great to be here. Thank you for having me on. Well, we are seeing that investors here in South Africa are embracing ETFs, but I think it's a story like we see in other markets where you have to educate investors, both retail and institutional, about ETFs, how to use them, what are the differences in the products. So we are seeing growth here in the domestic products that are listed locally, but you also do find that the professional investors are using that broad array of products that are listed on exchanges around the world. And to give you a sense today in terms of real ETFs that are funds held at a custodian, we have over 2,282 products with, as you mentioned, assets over $1 trillion US. And they provide exposure to various equity benchmarks, including, you're talking about the end of Ramadan, there's ETFs that allow you to invest in Sharia compliant indices. We have developed sectors. We also have many that are tracking fixed income, whether it's governments, corporates, high yield, as well as commodity exposure.
Well, Deborah, looking at BlackRock's investments into South Africa and your ETF exposure here, what are we looking at this point in time? We know that obviously for BlackRock, and of course being the world's biggest wealth manager, emerging markets, very important and key factor for you. Does South Africa play a large role?
So the role that my team has is we're doing research on the ETF industry, so all products from all providers. In terms of BlackRock, in December, BlackRock finished the acquisition of Barclays Global Investor, which is the manager of the iShares family of ETFs. So now everything is managed by BlackRock. iShares is the largest family of ETFs, both in terms of number of products globally. There's over 453 ETFs that they're managing, and assets over $506 billion. So they capture 46% of that $1 trillion. The next largest manager, State Street, would have 110 ETFs, capture 14% of the market. Vanguard would be number 3 with 47 ETFs and 10%. And then you have 121 managers who each have less than 5% market share. So it's a very diverse set of players. And what you find is there are ETFs that iShares manages that include exposure to South Africa. So whether it's on the MSCI South Africa Index or whether it's part of the broader MSCI emerging market ETFs that they offer a couple of different products, because one would be domiciled in the US, another's domiciled in Ireland, and then you also have an accumulating version. So South Africa and emerging markets overall is an area where investors for a long time have preferred to use ETFs, because quite often people have a hard time, even being a retail investor or institutional, finding good information about individual stocks in markets outside of their home country. And using an ETF, you don't need to have foreign investor status or special custodian. So the emerging market ETFs have always been very popular, both for retail and institutional investors. So last year, as an example, we saw over $36 billion of new money go into emerging market ETFs. And so far this year, we saw over $8 billion of new money going into emerging markets. So we're still seeing investors putting money to work in emerging markets, but we also see people investing in fixed income, whether it's governments, high yield, inflation, as well as putting money to work in products that provide exposure to gold. So a bit of flight to safety and quality, as well as people willing to put money into, as they would deem it, riskier investments.
Well, Deborah, I'm glad you mentioned gold. We know platinum ETFs have also been launched extensively as well, and it's all about flight to safety, hedge against inflation. Which is the most popular ETF at this point in time on a global level?
That's a good question. So I mentioned this number of 2,282 ETFs. The top 100 capture over 64% of the assets. So the biggest ones in terms of assets actually you would see that S&P 500 is very popular in terms of assets. Gold is actually not a true ETF. You have to be careful. Some of the products are actually structured as partnerships or notes, so you would have different counterparty or issuer risk, and they might also mean that the tax situation could be different for you. But exposure to gold is also one of the big ones. MSCI Emerging Markets is very big. EFA, Russell 2000, even some of the sector products have become quite big, and some of the fixed income. So the core beta building blocks are getting bigger and bigger. So the benchmarks that institutional and retail investors know and use, those products are getting bigger and bigger.
Deborah, just very quickly, we're running out of time, but it's been said that ETFs create a lot of volatility in the market. What is your response to that? And also just looking at the fact that a lot of ETFs, and of course also the amount of ETFs that are shorted over the last while, what does this do to the speculation in the market? Does it create more speculation and more volatility, or do you think it's creating more fair trade?
I actually think that when volatility in general goes up, people prefer to use ETFs because they don't want to take stock or bond specific risks. So they want to be able to easily get in or out of the exposure very quickly during the trading day. And that's the beauty of ETFs, is they are diversified because they're tracking benchmarks. You can trade them with multiple brokers anytime during the trading day. In terms of short, what you find is there are ETFs that allow you to go short, and there's also leverage inverse. You really need to be careful about using these products because the leverage inverse, so 3 minus an index product, are rebalancing each day so that they're giving you 3 minus the index each day. And so based on path dependency, volatility in this rebalancing, the performance over time cannot be predicted, and it's not tracking risk. So you have to be careful that you look at performance of those products every day. You also can borrow ETFs to put on shorts. That's an easier way of implementing a short trade, actually, because it's just tracking the index 1 minus. And what you find there is the short interest level was the highest it's ever been in the month of June. So we're seeing that many investors are skeptical about the performance of many segments of the market. They're putting on hedges by going short ETFs. So 2 different types of ways of putting on shorts.
Fantastic.
I would say that borrowing ETFs to put on a hedge is a cleaner way of doing it rather than trying to figure out the performance of some of these leverage inverse products.